Real estate is an expensive product. So there's 3 capital mistakes I see in real estate. Check 1, 2. I'm here again. My name is Victor. I'm a realtor for about 20 years. This is about 3 capital mistakes I see that happen in real estate. I'll shift to the other screen. How to lose money if you do this and how to avoid it. I help investors buy real estate and improve their skills, gain net worth by enhancing their investments. My experience is that there are some pitfalls that you should avoid falling into buying real estate. So you just step into real estate and lose money, or try to avoid these pitfalls. In this video, I'll break down exactly how you can avoid 3 capital mistakes in real estate and how you can recognize them and avoid falling into them. By avoiding pitfalls, you can actually make money in real estate. So, number 1, buy far away. People buy far away because it's seemingly cheap. If you buy in a cheap area, then one of the pitfalls is that you have to take time to go there to visit the property, and if there's something wrong, you have to go there, solve problems, find solutions, and in that case you are actually losing time and money to go there. And the problem of buying in a cheap area that is far away is that the properties you buy could be very cheap, but the income you get from the rent is probably also very cheap. I know an area where the rent is so low actually that you are not able to make a profit if anything changes, let's say tax, or that the property is getting vacant for a few months and then you lose money. So buy cheap, that is a problem. It costs you time. If it's done for you, then it will cost you money. If you do it yourself, you have to go there. It takes you time. If it's done with you, you still have to go there and somebody is helping you with the property over there. But done for you will be the most efficient in real estate. And if the property is too cheap and there is no money coming from it, then you will lose money. So buy far away in a promising area that is far away, like for instance Dubai. I'm not saying you that you should not invest or should invest in Dubai, but the point from an area like Dubai is people go there for fun. Great, if you want to go there for fun and buy property, do it. There's no problem. But if you think it's the only way to make money, to invest your money over there, and you don't have enough money to do so, then going to Dubai and take a holiday will be maybe too expensive for you, and that will cost you and time and money, and it could be very promising, but if you don't have an exit strategy and you don't know what you're doing, it could be something that you best avoid. Try to buy more local. So what I also see is that people buy outside cities or far away from villages because it's very cheap. So they buy in a rural area. But the problem is it's harder to find tenants. It's harder to resell. It's harder to find somebody who does the managing for you and checking in and checking out of tenants and seeing what problems there are. It's hard because if it's too far away, it will take you time. So what to do best? Look harder for local. Of course, the house of your neighbor could be not the best investment, but that's very, very local, right? In your city or village, there could be opportunities that are so close by that you even miss it driving past it. So investigate your local market, drive around, look at your home area and your office area, so the place where you work. Tell people in your network that you're interested in buying, and copy strategy of winners, because a lot of people buy a local, and I know certain people that buy only if it's in walking distance. So if you want to Google, if you want a copy of this Google Doc and learn more about getting your first asset, or maybe expand to multiple doors, I'm sharing this in my free community. Check the link in the description, and I will make this, check the link in the comments of this video to join my community. So number 2, buy in highly regulated areas. Some areas are really tempting, but because it's so tempting, governmental regulations or rules that could apply to the area give you restrictions on either rent or tenants or anything that can happen. So I'll give you a few examples. Rent restrictions, price raise, and the price itself. If municipality says it's too there are too few houses, that can restrict, let's say, the rental price, or they can restrict the raising of prices. I see that in a few European countries. So be aware of those restrictions. Tenant restrictions. So it could be that there is a certain type of tenant that has priority to for housing by governmental rules, and you have to try to avoid that, because you have to be free to choose your tenants of your likings. So it could be a combination of these, and it could be the number of tenants. So some places, they prevent you from sharing a house with more than a couple. So be aware of those restrictions. Also, a problem is the rental duration restrictions. So in not all areas it's allowed to do Airbnb or short stay, and that means that you're limited to the way that you use your own property. It's your property, so you can do normally what you want with it. That's what you think. But if there's a restriction on it by the municipality, then it limits your income with or plans of your income. So holiday housing, you need a permit. So buy and sell restrictions. I'll do that again. Buying and selling restrictions. You see these limitations you see in, for instance, holiday parks or golf parks and apartment buildings. And the problem with that is that you do not have the total freedom to whom you buy from or who you sell to. And that is something you have to know before you buy the property, because if you want to sell, you must be able to make a profit, or at least take your money out. So what to do best? The best is go away from there. Don't invest in something like that. So look for regulations and restrictions first. Is your plan to let vacation homes? Then look for the permits and the abilities, and if there are any restrictions in the municipality. So it's very, very, very keen to look at that, and you see that you see that all the time at coastal areas, that a lot of investors buy property to do vacation homes, holiday housing, and that's not always permitted. So ask the seller if there are problems and what problems there are. If you're not sure about finding it out, ask a professional. consult local realtor or call the municipality and find out. You can probably Google it, but it's always best to pick up the phone and ask for advice. I currently have a few spots open to work with me, one-on-one and cohort. So if you want to have access to me, you can find a link inside my community to hook up with me for a call. First come, first serve. So number 3, you like it too much. That is a great pitfall. It's so often that people have a bit of money, they have money on the bank and it's itching, and they're looking for property, and then suddenly they find something and that's the most beautiful place, it's paradise, and they're buying it for themselves. The problem with that is that's not an investment, that's just a very expensive holiday location which you have to go back to every year or a few times a year, and maybe your friends and family will use it and they're not paying you so well, and if it's for your children, then well, no problem, you can do that, but it's not an investment. It will cost you money, it will be a liability. So that is the shiny object syndrome. It's the woman in the red dress from the Matrix. You get distracted. So please be careful. If you're looking for properties, make a plan it ahead. So if there is a too promising outcome, then it's probably too good to be true. Be aware of that. If the numbers are extremely well and it's only gross profit, then it's not probably profit, but it's gross income, and gross income is not the same as gross profit. So be aware of these numbers. Is it looking so nice that it blinds you to see the difficulties and the problems? Then you have to be aware. You have to really be aware of the problems that could be below surface of what you see in the outside. So, and if you want to have it for yourself, then it's not an investment anymore. It's going to be a liability for you. So, what to do best? Shiny objects are like the woman in the red dress, and be aware of that. Be aware of anything you see. If you start scrolling for houses or driving around, you're gonna end up somewhere at least once. It's just shiny object, so be aware of that. So what is your goal and what is the property contributing to your goal? It's very important that you write down what your goal is. So if you're scrolling on real estate and looking for objects, does it contribute to your goal? That's very important. So is the outcome real? If you see numbers, is the calculation based on very on the high side of the calculation and the high side of the outcome? So everything looks nice. It's sunny weather and it's never raining and everybody's happy, and it's not even never nighttime. So dancing all day. No, that's too shiny, and be aware of the numbers. Always do the due diligence. Write down what you think can be the rent. Write down what the mortgage will be. Write down the costs. Subtract, add, multiply, calculate, but don't rely on the gross numbers that they gave you to just try to sell the house to you. So, are the numbers on the positive side? Be aware. Does the outside look so beautiful and the location is so awesome? Yeah, great. But if you don't have any permit if you don't have a permit to lease it to a family, or if there is no option for, let's say, if you're buying in a coastal area for holiday housing, be aware it could be a liability. So how about the surroundings and the core inside? Is the house still okay, or is it just shiny? Because what you see if you go and visit properties is if it's old, if it's broken, then it could be painted from the inside to cover up the rotten parts, and that's very important to check. Installations even so, and with installation and appliances, that will just cost you a lot of money to replace, and that has to be diminished from the purchasing price. So it has to be taken off from the purchasing price. So then it could be interesting. Is it in a flood zone? What kind of flooring do they have? Is the flooring, is it a very old house and there is brand new flooring? Be aware, it could be something very bad underneath. So and then again, sorry, I passed on the flood zone. I'll repeat that. Some houses are built in a flood zone, and you have to know that if it's flooding season, then the house could be underwater, and it could be every 50 years or every 10 years or 500 years or 20,000 years, whatever. So that's something you have to take in account. Buying it to use partly for your own holidays reduces the financial outcome, and that is very important. That's what I say. If you buy a house for your own holiday, vacation, retreat, that would be damaging your investment. It could be a great investment. It could be the greatest place to go and have the retreat of your daily activities, so that you go there. But then it's like your own house, a liability. It's something you use for yourself, and it's not an investment like it could have been. So have the deal looked over for a second opinion if you're not sure about these things. So a recap: you can avoid pitfalls if you look ahead and beyond seemingly shining gems. If it looks so good, if it's so shiny, be aware if it's not in your plan, if it doesn't contribute to your goals, be aware and think twice before you buy. You can make money in real estate if you make wise decisions. So, and that's very obvious. Take into account these pitfalls and then make wiser decisions based on maybe a second opinion and based on numbers and facts, and not on sky cloud castles. So you can find property closer that will make you the same money with less costs. Think about flying for a day instead of walking for 5 minutes. That's really a big difference, and the price of that difference is tremendous. So you can go further and better with a mentor or a coach, and in that case, I mean, have you been able to get the second opinion before you buy that could prevent you from buying at all at that moment? Those are the 3 pitfalls in the recap. You can find a link to my free community in the comments of the video, and the Google Doc I will share in my free community. Thank you for watching. See you in the next.